The question is, when was the best time to buy? And it's now. It is always the best time to buy real estate right now. I just left this last fall, my day job, and quote unquote retired.
Congratulations.
The majority of millionaires and billionaires are heavily into real estate. And that is because a drop in an interest rate right now does not in any way, shape, or form show me that a house price is also going to come back down to a reasonable level. Stop paying for what you want and start allowing your smart decisions, assets, discipline, etc. fund your lifestyle and protect your family for the long term.
All right, what is up, and welcome back to Zen Business, part 2 for Casa Shares. I have Amir's co-founder, McKay, in the house today. McKay, thank you for coming all the way down from Idaho. It's a pleasure to have you. Welcome to the show.
Thanks, Jonathan. Great to be here. California is not disappointing on weather, and we've had a great day with you and your team.
Yeah, man, it's been awesome. And you know, the more I meet a team like yours, and I'm like, damn, this is a really impressive product. And then I get to know the brains behind it. And like, it's like an iceberg. Like I just keep seeing more and more like cool shit like that you guys have done. And your story is so interesting. That's why I wanted to bring you on separately and ask you about it, because Casa Shares is a piece of technology. Like, okay, the app allows everyday people to buy fractional shares of real estate. You can invest as little as $100 or $1,000, buy a piece of real estate, get ROI on the capital invested. You can get dividends. You can get the equity, right? That's what Casa Shares technology does. But there's a whole investment thesis behind it around how you buy properties and what the real estate aspect of it looks like. And you're a seasoned developer, real estate investor, and all these things. So that's what I really want to talk about with you today, because frankly, I don't know that much about that. So, McKay, why don't you get us started by talking to us about how many years have you been in real estate? What type of real estate have you done? Just give us the background on your story, please.
Yeah, appreciate it. Almost 2 decades I've been in real estate. So the better part of 18 years, I had a couple sidetrack jobs that pulled me away for a little while, but then I jumped right back. So I went on an LDS mission to Brazil and lived in Brazil for 2 years.
Awesome.
And that was 2004 to 2006. And when I got back from Brazil, I had grown up in Utah, but I went up to Idaho, BYU, Idaho, and I thought I would be there just a short amount of time. But when I got home, I immediately got a job working for a student housing apartment complex in Rexburg, Idaho. And I would file papers at night. I would help a manager of this property. At the time, there were curfews that the students had to be in by a certain time. And I was a resident assistant, and I would help, make sure that people were in on time. And that kind of kicked off my career in property management and real estate investment. So the company that owned the apartment complex was located in Seattle, and they're one of the top student housing real estate investment portfolios in our country.
Okay.
And so as I was going through my studies at BYU, Idaho, I thought that I was learning something that would help me pay for school. And I always had that thought in my mind, with my business degree, where am I going to go? What am I going to do? And I never was able to leave property management. I just left this last fall, my day job, and quote unquote retired.
Congratulations.
Thank you. Yeah. And went full time with Casa. But I just a wide array of things that I've been able to see in the real estate world. The firm that I worked for out of Seattle, eventually I had to move up to Seattle because I kept growing with the company, and it was just a very successful career, and some of the best people you could ever work with.
Awesome.
That knew what they were doing on the property management side.
Yeah, real estate people can be savage, especially commercial real estate. So it's nice to hear you had a positive journey.
Yeah, absolutely. My group up in Seattle was amazing, and mentors even until today. But here's where I started to draw lines in my career. We would help wealthy individuals become extremely wealthy. And it was great. We would see someone come in like a dentist or a doctor who society says those people are wealthy, right? Mm-hmm. They've gone to all this school. They're somewhat prestigious in their positions. And when you see one of those individuals put $500,000 or $1 million into a project, and 5 years later, they have received that $500,000 back in dividends, but they still own the same amount of property and they're still receiving dividends, right?
And the property's gained value.
The property has appreciated, they're receiving dividends, and they take that $500,000 in dividends that they got back and they put it into property too. And pretty soon they're getting dividends from multiple properties, and they have multiple investments that are paying them far more than their medical practice or their dental practice.
What time frame did you say? Over 5 years you see that happen?
Yeah, a lot of cases there were properties that we would buy as a group, bring in these investors, and we're talking, this is a big, multi-billion-dollar firm that had less than 500 investors.
Wow.
And these investors would just continue to recycle their money to have ownership in more and more and more properties.
It's crazy. And it earned more than their day job.
Absolutely.
Shit, I'm quitting.
Yeah.
Forget being a dentist, eye doctor. Yeah. So was that a real estate investment trust, the firm?
It's similar. It was a private company. And so it wasn't the typical REIT that 401ks and others are putting into. So just a private group, private fund, but it was for accredited investors only.
Got it. Yeah. And that's something I find, that's an interesting dichotomy here because, I understand that the whole sophisticated investor thing or accredited investor thing was to prevent people from losing their ass. But at the same time, what it's done is it's shielded out the little guy from investing. And that's why I find Casa Shares so interesting, because there is a whole generation of little guys who do not have 500K to invest, who are not worth $1 million plus. And that's the part I love about this is this is a story of the come up of the little guys. So talk to me about like the investment strategy. You're I guess you could call you're like the chief investment officer at Casa Shares, right? You're deciding the investment thesis, the trajectory, the time frame, what neighborhood you're investing in. So talk to me about how what is the thesis and how did you land on it?
Yeah. Well, we're in Rexburg, Idaho. That's where we've said that we based the company out of. Happens to be where I live, so it's convenient, right? When we are looking for properties that we're going to put on our platform, we're looking for the areas in which our investors are able to make money. So if we walked outside the door here right now, you don't have to look very far to find $1 billion worth of assets, right?
Yeah.
I mean,
especially in this area.
Yeah. Anywhere you go in this country, in this world, there's real estate.
Yeah.
And where there's real estate, there's opportunity, investment opportunities, returns that can be made. And so it doesn't really matter where we're at. There are reasons why we didn't start in California, where Mirza lives. There's a lot of barriers to entry. There are a lot of things that would take away from our investors' bottom line or the profit that they could make just through taxes and red tape and other things like that. Mm-hmm. Not that we've ruled out California altogether, but I happen to live in an area that plans to double in size in the next 5 to 10 years, right? So we were 30,000 people just a few years ago. We're currently sitting at 60,000. We're going to break 100,000 by the year, 2030. So it just happens to be this place, and all up and down, we call it the I-15 corridor, going, from Vegas all the way up into Montana, hitting Utah, Idaho, all these different places. There are a lot of people who are fleeing coastal cities and coming to this area.
Yeah. I mean, think about my personal situation. I live in LA. I pay LA prices for gas, for food. Everything is very expensive here. And the houses around me, in this neighborhood, 2 to 4 million as a floor. Okay. There's houses as much as like 5-6 million. And this isn't a specifically nice neighborhood. It's just a decent neighborhood, right? The ROI equation is tough for me to justify, right? I pay these high prices, but I work remote. My whole team is remote. I don't go out to clubs and bars, so I don't really benefit from the LA social life in that regard. I actually more benefit from my professional interactions in the office where I work. But I make just as much money if I'm living in Idaho as if I'm living in LA, but my costs are like 4 times higher here, right? So there is certainly a draw that's pulling me to other areas because for me, what's important to me is having a safe place for my family, place for my dogs to run around, having a little bit of land, being able to tinker with my house, put my cold plunge, things like that. But the ROI equation is getting smaller and smaller in California coastal cities, especially my best friend's house, like every house around has burned down in the Palisades, and he fought the fire, so thankfully his house didn't burn down. But like we got these major forces coming at us in an area like this, in addition to homelessness and all these other things, high tax and all this stuff. So the ROI equation is getting less attractive, and it's becoming more interesting to potentially go somewhere along the I-15 corridor and just keep up with my friends on FaceTime, right? Or go visit them, right? Because I got more money now, right? So I don't know. I find that very interesting, and my dad was a professional investor, a real estate investor as well, and he bought in like substandard neighborhoods. He didn't go to Beverly Hills to buy, and I think I'm starting to pick up what you're putting down in terms of your investment thesis. It's about making practical, realistic, smart, accessible investments for people. So I don't know if you can talk about outlook at all, but like right now on Casa Shares, you have a property that is a multifamily, got a bunch of units in it. You also have a single family home that's just about to be built. That'll be accessible to people. Are you projecting out a certain ROI or return on invested capital for those properties, or like, how does that look? Like, how do you, what are you hoping to get out of those?
Let me tell you a little bit about my past career, which I think will help. Because of our regulations with the federal government and not promising, certain...
I get it. We're not together.
Yeah. So let me go to my past life where we wanted our investors to get a minimum of a 10% cash on cash return annually.
Per annum. Okay.
Right. And that's kind of a baseline for an accredited investment. And so when we're looking at these deals, we're giving people opportunities. You can earn 1% or whatever you call it by putting your money in a bank and leaving it, or playing the CD game and trying to make little bits here and there.
Basically losing money.
Yeah. Inflation is just
relatively, you're losing money.
Yeah, you are,
due to inflation or to opportunity cost. But go on.
Yeah. So there's a good portion of us wanting them to get immediate return. So we'll buy a property, we want to get a renter, stabilize the property, and then be getting them dividends paying out within just a few months.
For the everyday investors on Casa.
For our investors, they're putting a minimum of $100 in. Even if they put $100, we want them to be seeing the pennies coming in, because there's something gratifying about making money off of your money.
Well, and there's a whole snowball effect, right? Like 10% year over year. I don't know if that's a consistent historical performance, but like, you got $1,000, it's $1,100 next year, and then it's 100, $1,200 the following, $1,230 the following year, and before you know it, it's doubled after a few years. And that's how, example you gave earlier, if somebody's getting $500K back on their $500K investment after 5 years, it seems completely plausible now.
It does, and we see ourselves a little bit on the education side as well. If you are consistent in your investment strategies and disciplined, those are a couple of the words that we use regularly. At the end of the day, we want you to see the results. And we're not the only way. If somebody has been putting into their 401k for the last 35 years and they work for a unionized steel company and they've been putting in, they're going to see returns from that. There's a reason why, I can't say 100%, but there's a reason why the majority of millionaires and billionaires are heavily into real estate. And that is because it's the number one wealth creator in the world today.
Yeah, it makes sense. And I don't know. I guess your prudence instills a lot of confidence in me, just in terms of like, you seem like a shrewd businessman who's just like, and I don't want to generalize, but when I've met dudes from Utah, Mormon businessmen, they seem like the cleanest cut, most ethical, good people to do business with. And I've always thought, like, I want to be in business with them. Like, here, I'm always worried about snakes. Like, the Mormons, like, they get down to it and they build a lot. But anyway, a little sidebar there. So I guess my what I wanted to say is, like, when I first saw Casa Shares, I'm like, to me, I open up the app, I just see a few properties in there. I'm like, I can't really trust this. Like, who's actually behind this? Like, how do I know what kind of returns I'm going to get on these properties? But now, after having this conversation with you, I think it really dispels a lot of my cloudy fears around it, just knowing that, like, okay, there's an investment thesis that went into this. There's a guy who's been producing year-over-year returns for all of these people for the last 15 years, and he's the one guiding those investments, because I didn't want the onus to be on me to make the right choice of a real estate investment. But what it sounds like is you've already made that choice, and whoever buys on the platform is essentially going to end up in a relatively smart investment.
Yeah, safety is a big thing, right? The fact that somebody's not buying crypto or stocks, which are invisible items, right? There's
That's a nice way of putting it.
Yeah, it's hard to grasp. Not that those are bad things, or, but you have to really know what you're doing. This is a tangible object. And over time, that tangible object that we are selling as our investment runway is something that if you bought anything real estate related in the last 150 years and held on to it, and you look at the value
let
today,
it compound.
It is by far the best catalyst that anyone could have.
Yeah, I mean, think about the houses that are on Fifth Avenue in New York City. Like, at one point, those things were probably $10,000, right?
Right.
So it kind of speaks to your point around generational wealth and the importance of longevity here, especially when it comes to compounding investments. In terms of, like, I know we can't talk about, like, what kind of returns that we can expect, but we can talk about some of the historicals. I guess, like, in your perspective, like, who do you think should be positioning themselves with a little bit of real estate exposure, even if a small amount on Casa? Like, who do you think this is the best for?
Yeah, I have 5 kids. My oldest is 15. She'll probably leave the house in 3 years. It's a little bit of a daunting, scary thought.
Oh man, especially if it's a girl.
Yeah, it is. Yeah, she's great. She's going to do great things. And at the same time, my biggest fear is, are my kids going to be able to afford the luxuries of a first world country that we live in? Mm-hmm. And so you could call this business very mission-based. And mission-based in 2 ways. One, I've worked with very wealthy individuals, wonderful people. I'm nothing but happy for their successes, and they fall into that 10% of Americans. The other 90% don't have the same options to go and start that snowball or start to build that generational wealth. And so I see this being a wide range of people who would want to be involved in this. And that's hard to say as a company. Yeah, we want, 90% of Americans to participate in this, but I really see this 18 to 30-year-old demographic that could really start. And you might be in college and you have to eat top ramen for the month, but you put $100 in, you put $500 in, whatever you can, and you start building patterns in your life. And that's where that discipline comes back. If you can stay disciplined and you can say, every month I'm going to put $100 in, it's amazing what that turns out to be over a decade or two.
Yeah, one of my first investments was a 401k that I changed jobs, forgot about it. And like 15 years later, or not 15 years, like 7 years later, now it's been 15 years, but 7 years later, I looked at it, it had doubled. And I was like, whoa, okay, great. And I didn't touch it. And this is part of why I really want you guys to build a feature where we can do automated recurring investments, because I'm personally going to do that. I need to get some exposure there, especially now that this business is cash flowing a lot better. But the thing I wanted to ask you about before, which I think is really important in this conversation, is there are two major factors that make me feel like it's critical to get into real estate right now. Whoever you are, wherever you are, whatever your situation is, those two factors are interest rates. One, if interest rates go down, I'm going to let you speak on this, but if interest rates go down, then the housing market's going to boom. And assuming that things smooth out, likely. So there's that. And then there's a major housing shortage, right? Especially in LA, 100,000 people got displaced in the Palisades. So now all the rentals in LA are basically impossible to get. You're fighting over this, like, you got my friend's parents, they're fighting over getting like a rinky-dink shack in Venice for $10K a month. Like, they're 60 years old and they're bouncing from rental to rental. It's absurd what's going on here. So you got this major housing crisis in terms of a shortage, and then you got on the other side of all this rubber banded demand from people who need to get into a place, who need to buy a home. Because if there was more homes on the market, people like myself would be buying them. Younger people would be buying them. But the reason the prices are so high is because there's such a shortage. So that you got this major tension building on the demand side, and then on the other side, you got this huge impact of rates. So that all leads, in my opinion, to a really positive outlook for real estate. And they can't build houses fast enough. So I want to hear you talk about those two topics. Let's start with the housing shortage.
Yeah.
And why it's important.
It's a little different everywhere, right? I mentioned that there's this exodus from Washington, Oregon, California of people who are heading more inland, right, in the United States, and some of these more conservative areas are taking off, right?
That's another reason why I might want to leave this area, political beliefs.
Yeah, absolutely. And the pandemic only blew that up more, right? When things started happening on these coastal states, all of our friends that lived in Seattle that maybe didn't disagree, or that didn't agree politically with how the pandemic was handled in a blue state.
Yeah, it was horrible there.
And their kids and schools and all these different things, they're all gone. Nobody lives in that greater Seattle area that we knew, all these young families that we were with. That being said, for some reason, there's still a shortage. There are a lot of international dollars that have moved into our coastal cities and states, and that plays into it. But there's still so much demand here in the West, on the East Coast. I mean, everywhere there's so much demand. The first thing that I'll say is on the interest rate side. Interest rates were raised to fight this inflation, right? We know that was the strategy of the Fed, and all it has done has, as you mentioned, is just pent up that demand. People may have 2 or 3% interest rates from 4 or 5 years ago when things were good and they refinanced. So I use a term that these individuals are sheltered in place, right? So they may be in a condo, but since they bought that condo at a 2.5% interest rate, they have 2 more kids now, or they're trying to move up in a house and they can't let go of that low interest rate, and they can't afford the price of a new house necessarily. So everything is, these people are wanting to upgrade. They're wanting to get into a townhome or a starter home instead of being in a condo. Those who are in a townhome or starter home are looking for more of a custom build, and everybody's waiting for interest rates to come down. The biggest problem is when those interest rates come down and these people hit a comfort level, they're all going to hit the comfort level at the same time. And so you have a house that's worth $500,000 right now, but when all of that unleashes at the same time, and all of a sudden the Fed pushes things to 4.5% or 5%, which I think is going to be the new stable rate, all of a sudden you have 35 people putting in offers on one single house, and that person selling the house, naturally the economics say that
Crank it up.
that house isn't going to be a $500,000 house. Somebody's going to be willing to pay $585 or more, right?
Yeah, it's partly because there's cheaper access to capital. So partly because it's cheaper for me to borrow, and partly because now it becomes accessible and I'll actually deploy the capital that I do have. So there's a double whammy that will happen in terms of driving the home prices up. So you got to kind of be ready for it. Of course, you got to invest in Casa Shares so that you're actually catching some alpha now, especially once that happens. That home prices are going to rise dramatically. And if you have some exposure on Casa Shares, of course, you're going to catch that, that ROI. So now talk to me about the, so we talked about the shortage, or we talked about the interest rates too. So you said you see them going to like a 4.5-5%, stable rate.
Yeah, we've continued to hear the Fed say inflation is coming down, right? We're not seeing the inflation that we saw 12 or 18 months ago, which is a good sign. And hopefully with more conservative government spending and finding ways to save, we can maybe make the dollar gain some of its value back.
Novel idea.
I'm not confident in that statement by any means. That was asked with a question, but there are just a number of factors that are going to affect this. The biggest thing is that a drop in an interest rate right now does not in any way, shape, or form show me that a house price is also going to come back down to a reasonable level that people can comfortably invest in.
Well, the only way that would happen is if builders were to build more inventory. That's what Texas is an example of that. It's one of the places where home prices have actually gone down because they become more accessible. But that's an anomaly, and it's also because they have unblocked the regulatory process to let people actually build. And in California, there's so much red tape that people can't build even if they want to, or obviously it's just restricted a lot.
Yeah, so that used to be the case. Is with more supply, you take down that demand and you start moving things in a direction that would be advantageous for the home buyer or the investor. What you've seen over the last 18 months is a little bit scary to me. And that's the fact that new homes were not being built at the level they were 2 to 5 years ago in this time period. Yet construction costs did not take a drastic dip like they have in the past. And so not to say it's a conspiracy theory or anything like that, but it is a little weird that we have lumber mills full of lumber ready to deploy, and that hasn't caused the prices to go down.
So what explain that to me. Why is that happening? Like, how could that be?
Well, part of it is just that the dollar is worth less and less. And so you have all these materials sitting in different places. And you want to compound this issue. Now we're putting tariffs on, Canadian lumber that's sitting in the United States that now will go and be sold. And so trying to get those prices of goods and materials down is really tough. So I think economists around the country, around the world, are looking at this saying, what are the long-term effects on these things? Most of your door handles and your hinges and your fixtures, your plumbing fixtures, your electrical pieces, all these different things, they're not being made right here in the United States. Most of this is being imported, and a lot of it from China. So I see that there are a lot of issues if we don't figure out these tariffs.
Yeah, I don't disagree. I don't think anybody disagrees with you on that. Even if you're a Trump voter, you're like, okay, let's sort this out already,
Yeah.
So what does that mean for the everyday investor? Like, does that mean they're safer investing in Casa Shares, or should they change their approach somehow? Like, what's your outlook there?
Yeah, so the thing is, let me go. There's a guy down here in Orange County. His name's Chad Willardson. And Chad posted something just a couple of months ago that has just been ingrained in my brain. And the question was, when is the best time to buy real estate? Right? And he has this chart. Was it 1920? Was it 1940? Was it 1990? Mm-hmm. And so the question is, when was the best time to buy? And it's now. It is always the best time to buy real estate right now.
Part of that's a little scary, especially like, for somebody like myself who, like, I invest everything I have back into my business. I can obviously take more out, or I can continue expanding aggressively and improving our services and whatever, just improving the business. But it makes me realize that like every minute that I'm not hedging into, especially a real estate investment class like real estate, where you got all these rubber band effects that are going to like, snap at one point, and then the price is just going to rocket up again. I mean, we saw it happen before 2008, and then we saw it happen again in like 2018 to 2021. And you're reminding me how urgent it is to get exposure to this. I want to like pick up the app and set up a recurring investment right now. I'm like literally thinking about all the apps that I have recurring investments on. I'm like, should I move this one over here? And even if it's like $100 at a time, I just think it's really crucial. And you kind of enlightened me. I didn't know that about the lumber thing, but it makes a lot of sense. It's like the way I see it, like businesses have to survive. And so if they're doing less business, they have to keep their prices high because their total volume is lower, right? It's like, you work with a creative, like a photographer who has no work. He's going to charge you $1,000 for a day because he hasn't worked in a week,
It's true.
And so I think there's some of that happening, and this kind of like desperation effect that's happening on people as well. So, I definitely encourage people to think about like whatever you can invest, because you're going to be grateful you did.
Yeah, it's true.
So, I've gotten a ton out of this conversation, McKay. I want to ask you like what you want to leave the audience with. Like if you could just, have a billboard on Sunset Boulevard, what would it say?
Yeah, I think the biggest takeaway from what we're trying to do is the fact that we're trying to open doors that weren't previously open. We're trying to make an 18-year-old have the label of real estate investor, when in the past that is more of an average of a 45-year-old American. That they don't have that title until they have their own stuff taken care of, and they have their own house and all these different things. And really the mission behind what we're trying to do is to allow other people who otherwise would not be able to have that label start somewhere, build a snowball effect in their financial world, make some sacrifices, and see themselves building that benefit over 10, 20, 30 years.
Yeah. And I love the mission. Obviously you can see this has struck a chord with me. And I read a lot of Naval Ravikant. I don't know if you know who he is, but he's kind of like my Bible is, or at least my business Bible. He talks about like specializing early in your career and having outsized results on that, and then diversifying. He thinks it's amateur to diversify at first. But I think things are a little different now, and I'm really glad that because all throughout my career, I was always taking my winnings and investing into various investment classes, whether it's like crypto or stocks. And one argument could be made, well, you should put it all back into your business and basically live like a peasant and have the business, eat it all up. But I think there's a certain discipline component to actively withdrawing money and putting it into another investment as a hedge. And I'm really glad that I did that because, during 2019, 2021, like when we first started working with TikTok, like, the business went from doing like 30K a month to doing 300K a month. And like, I started making all this money, and I was like, I don't want this to be exposed to the kind of fluctuations that come with my line of business. So I'm going to take some out. And then I did things like I paid off my student loans, or I put some into Acorns. I put some into other investment accounts. And ultimately that has been like a rock that has always been my investment portfolio that has kind of kept me protected from a leverage perspective as I go through different stages and phases of starting businesses and, exiting businesses and all that kind of stuff. So I'm really glad that I hedged my investments starting about, 10 years ago, because now, and you've probably experienced this, if business is rough, then it can take you down to zero. And it does take a lot of people down to zero, especially after people have a good success and then something happens. Like a lot of, you ask any millionaire, if he's been broke before, he's going to say yes. The School of Hard Knocks, that channel on Instagram, every millionaire he asks, they're like, no, yeah, how many times I've been broke? Multiple times, and that happens. And so I encourage everybody listening, take it from McKay, who's a obviously seasoned real estate investor and prudent mind, but also from my own personal experience, just start, diversifying a little bit. You don't have to do 80% of your portfolio, but 10%, just put it aside, because whatever the business does, you don't know. You might lose your job, but if that investment is growing, so many people spend on shoes and other stuff like that, and it's $100 on a pair of shoes, that could be an investment for later. I really don't think people have, if you kept that $100 in your account as an entrepreneur, I think the probability is very low that it would have generated more ROI than being invested in Casa Shares 5 years ago, So I just think that, that's my last message for people.
Yeah. And maybe just to add on to what you said, when people realize that their assets can pay them to live their lifestyle, it's a complete paradigm shift. And that's when you stop being part of the system and
the rat race.
you start to determine your future. We saw an $800,000 Ferrari today that we stopped and gawked at here in Beverly Hills area. And the funny part is, most people that buy those vehicles, they'll buy them, right? Just outright, go pay that kind of money. Great. They've been successful in something. But if you put that $800,000 towards real estate instead, and let that real estate pay for your car, you still have, $100,000 left over every year to go invest in something else. It's a different mindset. Stop paying for what you want in this life and living below your line of ability, and start allowing your smart decisions, assets, discipline, etc., fund your lifestyle and protect your family for the long term.
Yeah, that's a great message. I just want to build on that real quick, because there was a point in my career where I was doing the best that I ever had done in business. I was having these great monthly profits, and my investments actually outnumbered the business. And I was like, whoa, I was like, I want to quit now, because it's just, like you said, it's a paradigm shift when you have that happen. And so I did the math. Tony Robbins in Money Master the Game, he talks about this, but he's like, once you hit a certain level of wealth, that will start paying. Like if you have $1 million portfolio and you're making 10% returns, you're making $100K a year. That's a living wage for a lot of people's lifestyles. So if you can just get to the $1 million mark, obviously you reinvested. Now you got 110K or 1.1 mil, 1.2 mil. But that's kind of like the benchmark for anybody, really, is like, you just got to save up until you get to there, and then you can pretty much do what you want as long as you don't touch the principal, right? Yeah. So
that's the hardest part, though. When you tell somebody that, I worked for 30 years before I was able to check that box of being an accredited or sophisticated investor, right? That was hard. That included staying up late. That included all the college sacrifices, that, all these different things. It was so hard to get to that point. And then, being 30 years old and hitting that point, I doubled that within the first year and a half.
Wow.
Of that, right? And so then you just look at the fact that you will work your whole life to try and become a millionaire. if you're the average American, and it's because you don't get to play on the same playing field. Once you hit that point, all of a sudden you have all these options. And I think it's just really tough for people to realize how to get to that first $1 million, how to become an accredited investor. And you have to have a platform or a guideline, someone pushing you in the right direction.
Yeah. And just one last thought on that, like the hard part is not touching the principal, right? When the markets get tough, I mean, for example, when I left my old business to start this one 2 years ago, I deployed $200,000 out of my savings just to build this company up, building the website, keeping the whole staff on so that I could stay strategic on the business. It just took capital to get it done. And I did have to cut into my nest egg to get that, of course. And, I even sold some investments and stuff to make it happen, obviously knowing that in the long term that, would be an up and to the right graph. But, it's very hard to not touch that principle. The good thing about real estate is it's not liquid like crypto or like stocks are. So the ability and the option to liquidate it's a different dynamic, right? I can tell you right now, if I had real estate this whole time, I probably wouldn't have sold it any. I probably would have just scrapped it and figured it out. So, I'll leave you guys with that.
Yeah.
So
golden handcuffs. It's sometimes you really wish you could pull out that principle that you put in.
I've heard a lot of people say that,
but
it might be cash poor, but house rich.
Yeah. But when you have land, when you have assets that you can't easily liquidate, sometimes you have to get a little more creative in how you get through things. But at the end of the day, usually you're pretty glad that you didn't liquidate all that.
Yeah, I think a lot of people will be glad that they didn't liquidate it. And also when the real estate market's down, you're not going to want to sell for a loss anyway. And so the temptation more becomes, how can I get through this time and be scrappy, rather than how do I just sell some assets? And selling assets, in my experience, has just kind of been a cop-out, because it's like, well, I can get quick cash from selling assets, or I can figure out what the source of the problem is and why I don't have money right now, and then attack that. And that's just a dynamic or a paradigm shift that I experienced too when I, started having a portfolio that I just didn't want to touch, right? Because I got to that point where it was outnumbering my income at some point from my day job. So anyway, McKay, it's been awesome having you on the show, man. You're such a humble, just hustler. I really respect you. You're such a bookish guy, and I don't see you as the person to brag or anything, which I'm very used to here in LA. So I appreciate your humility and your kind of like prudent intelligence around all this stuff. So thank you so much for coming on, and I'm excited to launch Casa with you.
Well, thank you. It's been a pleasure working with you.
Awesome, man. All right. We'll see you soon.
Okay.